Hey everybody, good evening. I'd like to welcome you to the Multifamily Investing Academy's Masterclass Elite webinar program, and we have a very special webinar tonight. We have a very special guest, and the title of this webinar is going to be How to Use the Landlord Cashflow Analyzer to Buy Apartments. Let me kind of just give you an overview for those of you that don't know who I am. My name is Charles Dobbins. I'm an attorney. I like to consider myself the multifamily attorney. I am the principal attorney for Dobbins Law, which is a multifamily law firm. In addition to practicing law and having my entire practice be focused on multifamily investors, I also happen to be a multifamily investor myself and the owner and operator of over $20 million of multifamily property, and also the owner of my own property management company, which I get into pretty extensively when I teach my students how to do this business correct. In addition to practicing law, I'm also the founder of the Multifamily Investing Academy. The Multifamily Investing Academy is the educational arm of Dobbins Law. It enables me to get out there and speak at different RIA clubs, at different organizations. Enables me to really teach people how to get into this business the right way without being bogged down, so to speak, with the practice of law requirements. And also, which you'll find out more about today, I am the head coach for the Multifamily Investing Academy's Masterclass Elite program, which happens to be our online multifamily coaching program. Now, a little bit of housekeeping. If you have any questions, there is the question box that you can type into. I will be checking that throughout the course of the evening as our special guest comes on board and he gives his presentation. Just if you have any questions, feel free to just type them in right there, and we will attempt to get them answered during this particular call. Also, there will be a couple of polls, actually one poll that I'm looking forward to really getting the feel of what the group is using right now. But let me kind of give you a little bit more of an overview. If you don't know it yet, if you're too new of an investor in multifamily, if you're just learning this business, what you really need to understand that investing in multifamily property is really a business, and it needs to be looked at that way. And the most important thing with any business is the numbers. That you must understand the numbers of the business, otherwise you will never be able to get a grasp on that business. But more importantly, and this is something that we really are going to focus on tonight, because this is the whole entire the beauty of Doug's package, is it's all about how you present the numbers. Just think about it for a second. You're going out there, you're looking for a multifamily deal, you find one, you get it under contract, you go through the due diligence process, and you're going to buy this property. But you're going to need to raise private money to do that. So the only way you can do that is you've got to go sit down in front of investors and show them how good your deal really is. And to do that, you have better put your best foot forward. And so what this software program that you're going to learn about tonight does is it takes you from the very first stage of analyzing the deal all the way through to putting together the marketing package that you will need in order to raise the private money in front of those investment savvy investors that you know you can get cash from. So that is the beauty of what you're going to learn tonight, is how to present the numbers in the right way. And Doug's going to spend probably about half an hour, maybe a little bit more, going through his software program so that you can see exactly how it operates. Now, before we get started, this is a new feature. I really want to try this here. I'd like to put together a poll. Now, you will see this poll pop up on your screen in just a moment. I'm going to hit the launch button. But what I'd like to do here is, for all the people that are on the call right now, I'd like to get an idea of what analyzer software for your multifamily deals are you using right now? Is it a homegrown program? Is it Doug's package? Could it be Dave Lindahl's or J. Scott Shields software, or is there some other guru's multifamily package that you are using to analyze deals? So let me hit the launch button, and when you see that come up on your screen, just go ahead and click which one works for you. And then at the end of Doug's presentation, I'm going to come back and show people exactly what the results were. I think I'm not sure if I'm going to be surprised or not, but I'm looking forward to the results. So without any further ado, I'm going to bring our special guest on right now and give him a little bit of an introduction. For those of you that have used this software, you know exactly how good it is. You know that it is probably one of the best things out there. I remember when I was first doing some coaching for someone, I actually was involved in the development of their analysis software. And when I went out on my own and really started working directly with multifamily investors, I thought I'm going to develop my own software program that actually does all the things that I wanted to do. And then there was a class I was teaching down in Florida, and actually no, it was in Washington. And one of the investors in the class was a CPA, and he said, "Have you seen this Landlord Cashflow Analyzer from Doug Rutherford?" And I said, "No, I've never even heard of it before." And he goes, "You've got to take a look at the software." I sat down with the student, and he showed me exactly how the program worked, and I just said, there is absolutely no reason why I need to be developing my own software, because this program does it all, and you will see exactly why I feel that way. Now, a little bit of background on Doug. Doug is an author, he's a businessman, he's a real estate investor, and he's also the founder of Rutherford CPA. That's his accounting practice, just like Dobbins Law is my law practice. He's also the president and CEO of RentalSoftware.com LLC, and Doug developed the Cashflow Analyzer software beginning back over 20 years ago in 1993. So he's been developing this program for over 20 years. And I know that if you called him up and said, "Hey, Doug, can it do this?" He works with investors to make sure that the software does exactly what it needs to do. And that's why it's taken over 20 years to develop into the program that it is right now. And it obviously makes sense. Over 30,000 real estate investors, real estate professionals all across the world use this program. And then Doug obviously is well credentialed. He's got his bachelor's of business administration and his master of taxation at Georgia State University down in Atlanta. And as we always say, that's probably because he couldn't get into Boston College. Is that right, Doug?
That's right.
Yeah. Welcome aboard, Doug. It's good to have you.
Well, thank you so much. I appreciate that. It's such a pleasure to be here with you tonight to talk about the software.
I appreciate that, because I've been trying to get together with you for quite a while now. So this is a very special event, and I'm thankful for your time. Now, let me just, before we move on, before we get started, I just want to do a little clarification. Doug has chosen this particular property package that he will be analyzing tonight. Now, this property package was sent to you in a very recent email, probably one of the more recent emails that you received from the Multifamily Investing Academy. There are actually 2 links to it. He's got 2 different packages that he's going to go through today. So if you are not looking at this particular package right now on your computer, check your email. Maybe you want to check your junk mail and find the email from either the GoToWebinar site or the Multifamily Investing Academy site, and that the links will be in there to give you the ability to download this particular program. So make sure that you've got it. I cannot give it to you right now on the call, but if you registered for this call, then you definitely did receive it today. So having said that, I am now going to turn the show over to Doug. Doug, let me jump over here. I'm going to give you make you the presenter, and okay, you can take it away from there. Let me know when you okay, there we go. Okay, yeah. So and I will jump on. No, hold on a second. Let me just put that back there. Let me. Doug, do you have the ball yet right now?
Let me see here. I'm going to make it back to you.
Okay.
'Cause I think it says the poll is open, so it needs to
Yeah,
close.
so let me take a look at the poll. Let's see how the poll's going right now. That's how instantaneous. Okay. All right. So right now, I tell you what, this is kind of interesting. 9% of the people are using a homegrown package. 28% are using your software, Doug. 17% are using Dave Lindahl's. 3% are using Scott Shields, and 44% are using some other package. And I tell you what, let me ask you this question. For those people that are using another package, why don't you just write down in the questions box what other package you're using? And that way we can talk about it. Actually, I've got some answers already. Monica Main's evaluator. Another person's using Michael Blank program dealing analyzer. That's a new one for me. Okay, so the two links, okay, let me see. Anthony Char's got one out there. Anthony Char's quick analysis. Okay, yeah, so those are some of the other programs that we see. I'm going to shut down the poll right now so that we can make sure that we have Doug's, that should do it. Poll is now closed. And the winner is other. You came in a close second, Doug, at 27.
Oh, okay. Well, we're going to change that tonight, aren't we?
All right, I hope so. I hope so. Okay, so I'm going to kick it over to you. Are you sure you want to make Doug? Yes, I do. All right, Doug, you're on.
Okay, show my screen. So which one is showing? Which one do you see?
Oh, I see a blue screen. I got recycle bin up in the top left. So we're looking at your desktop.
Gotcha. Oh, hang on. Let's see here. How about that one? That should be better.
There we go. That's the one we want. Yeah.
Okay, great. All right. Well, let me kind of just, since we only have a limited time, I want to just kind of break this down into sort of some components. And I want to take some time to kind of talk about the mechanics of the software to kind of expose you to how you navigate the input screens and how you can print, save, things of that nature. And then as we go through that, I kind of get you familiar with it, some of the system requirements, and then from there kind of actually do a simple sample analysis of an apartment complex so you can see the powerful nature of the software where it will help you analyze those numbers and calculate the cash flows and help you determine what that particular property is saying to you at that particular asking price. And then from there, we're going to go into our goal seek feature, which is a neat feature where you can solve backwards for the offer price based on your input and based on your goals that you're trying to achieve so that you don't have to solve over and over again. You're able to determine what that number is. And then from there, we'll transition into going through the output, if you will, the sample reports, some of them anyway, to show you how powerful that once you've done your analysis, once you've changed your numbers and you input it, how easy it is to insert pictures and your logo and your names and so forth to really make a robust presentation to those private investors, lenders, and what have you. So with that said, our software has got about 50,000+ users now. It's just been out there for a while. We've been always changing and updating it for the times and tax laws and what have you. So it's always a living, breathing kind of document, if you will. But the mechanics of it is it's going to be both Windows and Mac compliant. So as long as you have Excel for Mac 2011 or Windows Excel 2003 through the latest version. So you can have a very old version of Excel on the Windows side. If you're on the Windows, you install it and there's a desktop icon and you can open it up from there. It automatically opens Excel. And when it does, you basically get this screen here, which is your home screen. That's just kind of a quick way of navigating. We have several different tools there. And if you notice at the top, you'll have some buttons. And then, of course, you'll have your different ways of getting through the program, through these buttons at the bottom. And then, of course, your tabs at the bottom, which is part of Excel, that you can always kind of go through it. And it's just it's pretty simple to do because we're only going to be focusing on just a few of the screens that we have from an input standpoint. to get really to the math of the property. So with that said, let me just go to the input data screen. This is where you're going to spend most of your time, and you can get to that through this input data stream button here. You can use the home button, I'm sorry, the input button up here, or you can use the tab, depending on the nature of how you want to navigate it. And when you do, you will notice that on the input data screen, we divided it, the input into 5 sections. The first section is going to be relating to rental income and expenses, and these 2 buttons will take you to 2 separate screens, because we have to isolate the rental income and isolate the expenses, and we'll do that more of that here shortly. The second part is going to be the property, the cost of the property, and any reserves or any specific improvements that you want to do to the property. And again, you don't necessarily need to enter in all the input that we're asking. It's very important to understand that the software is extremely flexible with the nature of different properties, but just because we ask or have a place for you to input a particular number does not mean that you have to actually input that. So that's a source of confusion for some people. But the second part of the menu is the property costs, and then the resale valuation method. Okay, if you're going to buy a property, you have to assume at some point that you need to exit out of that property, and whether or not you actually ever sell is irrelevant. You have to do what we call a mark-to-market that particular property. You have to say, okay, let's pick a point in time, and if we were to sell that property, what are the calculations, what kind of gain or loss do I have on that property, and compare it to the cash flows that you've received to date. And then you can do what you call the internal rate of return and other total returns. And it helps you understand how that property will perform. Think of it as like buying Coca-Cola stock, and you've got a 3% dividend, okay? For 5 years, you may have 3% on your money that you've invested, but if the Coca-Cola stocks drop 20 points, when you go to sell that, then you really haven't made 3% per year. And that's very similar to a property. It's one component is cash flow. The other component is what is this property going to do as far as an appreciation over the years. And there's different methods that you would do to evaluate that resale. And for apartments, it's going to be using a cap rate. Cap rate's based on a percentage off of the net operating income. So $100,000 net operating income at a 8% cap rate, you take 100,000 divided by 8%, and you'll get about a $1.2 million valuation. And that's how you sort of, this is what the software does. It takes whatever the calculated NOI is and then assigns a certain value to it every single year. The fourth input section is going to be the financing, and you have up to 3 notes, but it's very simple because there's a lot of different formulas that you see in here that as you enter cost, these things are automatically populated, and you can just easily input your interest rate and your terms of your note, and it does all the mortgage payments calculations for you. You can do finance points. You can do refinancings if you need to refinance a note. Maybe you've got a note that's interest only for 6 months, and then you want to turn that into convert that into a traditional note. You can do that in the software. You can have a new note coming in year 3. So it's very easy to enter those particular numbers. But generally, when you're doing an analysis on a property, you're just going to use one note from an analysis standpoint, and it's very quickly that you can do that. The second section, the last section is our income taxes. Our software allows you to do a before tax analysis and an after tax. Today we're just going to do the before tax, but if you wanted to do a tax analysis where you're calculating before taxes and after tax cash flow, our software very easily does that. You enter your federal marginal rates, your capital gains, passive loss, and we also have an IRA module for those that have partners using their IRA money. This is a way to calculate their rates of return using the IRA tax laws. Very simple to do, but very powerful. But again, for most of you, you're probably going to do an analysis before tax just to keep the reports simple and keep the net numbers simple. And of course, whenever you go present to somebody, it's just fewer questions that you have to answer as far as taxes. But it's there, and you're able to do it. So again, if you know, at the bottom of the spreadsheet, you will see the various tabs that you can navigate to. On the first section, you'll have your rent roll, and we'll go through this in a little bit more detail, and then back to the expenses, and then this is where you will also enter your detailed expenses, and or if you just want to use a gross amount, just a whole number, you can certainly do that. A rule of thumb in the software, any cell in yellow is going to be an input cell. If a cell's not yellow, then that's generally going to be something you can't change. There are some exceptions, like over here you can change these descriptions. And these input streams are what drives our reports, because we don't want partners and investors and lenders to see necessarily our input, the stuff that goes into it. We want them to see pretty reports, so that's why we have to have those separate. The software easily does that once you're done with the input. Couple of mechanics here. When you go to print, all the different reports that you are able to print will come up when you select the print button on this green menu bar. Again, you do not need to print every single report. You can pick and choose. Sometimes it's only going to be one page. Sometimes it's 3 or 4, and others it's going to be a lot. You may want to have comparable reports. You may want to have your partner module or some marketing. It just depends. And if you don't have PDF creation software, we provide one for you, so you can actually print these reports to a PDF document right from the software. In fact, the package that you guys should have received was printed directly from the software. And that's the printing mechanism. From your personal information and your company logo and what have you is going to be accessed from this button on the green menu bar, and you'll just type in your name and the property information. You'll insert your logo here, and you will then populate, and you input it once, and then all the reports are all updated with your logo and company information and your name and what have you. Couple of minor points. Once you're done with the software, or when you want to save an analysis, you just go save, file save as, and it will bring up your save as menu. And of course, you want to make sure that you save the software as an Excel macro enabled workbook. That should come up as a default. But it's very important. Our software has just many macros in it, and basically those are minor, I guess, programming language that allows us to do solve-back features and drop-down menus and insert pictures and logos. And so you want to save it as a macro-enabled workbook, and then you'll see that when you do save it, it'll be an exclamation point. That's just natural. That's just Windows' way of telling you those or macros are in there. And then, of course, you want to save it, tell it where to save it and the name of the file so you can pull it up later. But that's just a simple way of saving it, and then you can always pull it up and make changes to it. Now, what I want to do is kind of quickly go through some minor things here. The way this is set up now is there's just a 5-year presentation. You have the option of doing up to 20 years. And depending on the nature of your presentation, you may not want to always show a 20-year analysis. You want to show just a 5 years, just to kind of keep things simple. You can also change the screen setting, depending on the size of your the DPI of your screens or the Mac. Sometimes you want to increase it. If you're getting old like I am, you definitely want your screen a little bit larger. But that is pretty much the guts and feel of it. And I will go through some more of the features as I input or show you a particular deal. And I have a real sample deal, Adrian Apartments 2, and I just pulled out some numbers so you can kind of see it at the high level. We have an asking price of $2.2 million with some initial improvements of $25,000. This is a 14-unit complex, and then here's the breakout: 3 units with a 1 bed and 1 bath, 5 units to 2 beds and 1 bath at $1,100 a month, 6 at 2 at 2 at $1,200. And of course, the math that the software will do for you tells you this is $184,800 per year. We're just going to use a simple vacancy rate of 5, rental growth rate of 2%, other income like late fees and parking and so forth. We're going to say $1,800 a year. Expenses, there's going to be, I'll show you the detail in the cash flow analysis, but we're just showing that an annual number of $21,250. We're going to say a reserve estimate of just $5,000 per year. And then our debt assumption is 30% down at the interest rate of 6.75, and then we're going to have 240 points. So, I mean, payments. So what we want to do is say, okay, this just came across my desk, so let's do a quick analysis and kind of figure out what this property, you know, how's this going to perform? Is this something I want to purchase? Is this something that I want to take to investors with? And if it's not, well, what should I pay for it in order to get the rate of return that I want to get? And so I would definitely just start with going to the input data screen. I need to change this number back. And I would enter the $2.2 million in the purchase price. That was based on the asking price and $25,000 worth of input, initial improvements. I'm going to pick from a drop-down menu the type of property that we have. And what this drop-down menu does, it does 2 things. It drives tax depreciation. Even though you're doing a before tax analysis, it's still calculating tax depreciation. It's just hiding it until you want to show it. It also updates the presentation and the executive summary as to the type of property.
Hey, Doug, can I just ask you, it's always thrown me for a loop, you've got the multifamily as one option and you've got apartments as another option.
Yes.
What's the real difference between the two as far as the software is concerned?
There's no difference at all other than vernacular. Some people like to say multifamily, and other people like to say apartments. That's the only reason.
But it doesn't change anything in the marketing package.
That's correct. Okay. Except for it will on the executive summary, it will change multifamily to apartments or vice versa.
Okay, great. Thanks.
So if you got it. So so that's going to be basically what I've entered the total cost of this property. Down here, I've entered the reserve amount. That's in my assumption is $5,000 a month, I mean a year, and then I'm going to assume an annual increase of 1%, and then this is the tax expense. So if I have a reserve amount, I want to assign a tax portion of it because I don't necessarily know, is that $5,000 of capital improvements or is that just $5,000 of painting and so forth. And again, if you're doing a tax before tax analysis, it doesn't matter, but this is what that's relating to. And then, of course, you have the control over where these reserve amounts go. Is that before net operating income or after net operating income? The difference being that it affects the resale value. If it's after NOI, then it won't have a negative effect on the resale valuation. And I'll show you that in a minute. And then, but if it's before NOI, it will. I personally recommend that you do it before NOI, so you're creating a worst case kind of scenario. A reserve amount, in my mind, is really just an operating expense that you just haven't been able to identify. But bankers, they want to see the magic word reserve. That's the only reason why we have it. In theory, you could just go over here to the expense screen and type in reserve, type in 5,000, and it's the same mathematical difference, but it just won't show up on the actual cash flow report as a reserve like it would in this situation. All right, so that's property cost and characteristics for this assumption. And then we're going to jump back up to the rental income, and hang on a second here. In this, in my assumptions, I said 14 units. Just to remind you real quickly: 3 at 900, 5 at 1100, 6 at 1200, and I have entered those into. Here's our monthly income: 9, 11, and 12. And here are my units: 3, 5, and 6.
And, you know, Doug, one of the things that threw me for a loop when I first started using the program here is the lease descriptions are just the different types of units that you have
Yes.
on the property, not the fact that you're going to, if there are 14 units, you're going to fill in 14 different spaces here. It's just
That's correct.
3 different floor plans. You only input the 3 different floor plans.
That's right.
Yeah.
You can do one of two ways. You can actually input 14 different lease descriptions if you want and have 14 rows, or you can combine like units and like rents and just have 3 lines that represent 14, because the software automatically does the math for you. It takes 3 times 900 and does the math. So even though you can do up to 500 units, 500 rows, generally speaking, you're only going to do maybe no more than 10 rows, depending on how many different kind of units. And you want to keep it simple, and you want to keep your mix of your units simple for people to take a look at and understand. In our cases, we have 3 mixes of units, and so I've combined them accordingly. But the math of the mechanics of it is I could break out 1 unit all the way down and have 14 of these and copy these things down, and it has the same mathematical effect. This, of course, the screen you're looking at now is what we call the advanced and detailed method. I want you to understand that you can change the way we input it. So if you click on quick and dirty, it changes the screen, and now you just enter 1 number. Sometimes if you have a single family or you just want to do a quick and dirty, you can just do quick and dirty method on that, and by entering 1 number and a vacancy rate and so forth. You can do an annual input where you're saying, listen, I know it's $100,000 a year. I've got this is a land lease, and I just want to quickly do it that way. But for our purposes, I'm just showing the advanced and detail, which allows me to go in and break out the leases and then assign growth rates if I want to each lease.
Hey, Doug, let me just, a couple of questions have come up. First off, you had a drop-down menu that showed the go zone. And the question is, what's the go zone in the drop-down menu? I think that had to do with the old Hurricane Katrina.
Yeah, that's irrelevant. It's irrelevant now. It was a rapid depreciation methodology. We've kept it in there just because there's some unique features in doing that. But GoZone is 3-4 years ago of down with the Hurricane Katrina and whatnot. So, so that would not be something you would be picking today.
Exactly. Now another question is, would the depreciation differ with an apartment or multifamily versus a mixed-use property?
Well, technically, yes, because you're depreciating the mixed-use property differently. One's commercial over a longer period of time, and then the apartments would be over a shorter period of time. So, yes, there is a difference. We don't have the mixed-use in the software where you're able to do the depreciation on 2 different things. It's a little bit higher level of than what we have it. We may introduce that at some point. But then again, if you're doing a before-tax analysis, that particular issue is not going to matter. So we just have not introduced. We would have to create a screen to fill in that detail. And quite honestly, 90-something% of the customers kind of struggle with the depreciation as it is. And we've got over here, we've got the personal property where you can do accelerated depreciation, land improvements. So people kind of do that. We have from time to time asked people have asked us for a mixed use methodology, but we don't have that particular thing right now.
All right, great. All right, that does it for the updated questions. So keep
Okay.
going.
All right, you got it. And you can also do, right now, of course, for apartments, we're doing on a dollar basis. You can go into square footage. You have commercial property. You can enter $1.20 per square foot. Again, just a lot of different features that you may not necessarily ever need to deal with, but it's very flexible for the input of what you're trying to do. In our case, we have our rental input, and the next thing we want to do is input our rental increases. How are our rental income, how's it going to increase over the years? And the way the software works is that there is a global number. So you enter a 2%, for example, and that's applicable to all leases every year. You can then go in and change it. But once again, this is all filled in, but in something in yellow, you can go in here and override it. So if the first year you want to raise rents by 20%, and then 2% from there, you have the power to control that. The next thing is vacancy rate, and again, same concept. You have a 5% that's a global rate for all years, unless you want to select where you want to enter the vacancy rate per year. Maybe you have a distressed property, it's 100% vacant the first 6 months, and then 50%, and then 25% next year, and 10, and so forth. You're able to control the vacancy rate. And in our example, we're just going to assume that this is stabilized property at 5% vacancy rate. And you'll see up here, this is the summary of what I've typed in. You have your income modeled out along with the vacancy rate. The sole purpose of this is to give you a smell test of what you've entered. So if you accidentally entered 9,000 instead of 900, you can see pretty quickly that you're pretty far off from what you were looking at as far as the assumption page. So it's a very easy way to just look at the numbers and instead of having to go off sheet to take a look at the numbers on the particular cash flow analysis. So very easily, very quickly, you can enter your rental income. Here's where your other income would be. And same concepts as far as your global rate, and then we have an option for other one-time income. Maybe you have a expiration of an option. There's a lot of different things that people do that they're just one time. They don't want to enter a revenue and then have it in every single year from then on. So again, flexibility, doubt you'll ever use it, but it's there. So that's basically going to be our rental income. And then we go back to where we're going to enter our expenses. And these are pre-populated, and you would just enter your data accordingly. And I've entered up the detail on this particular property. If you're doing a really high level, you could certainly just type in $21,000 in your first line and you're done with it. Because this detail just populates the expense report that we use as part of our package, and I'll show you that in detail and show you how much cleaner that is than the input. We have a lot of tools where it calculates a percent of expenses, percent of revenue, whether that's effective revenue, whether that's gross revenue, the per door expense. These are just for analysis. Again, something done for you already. You may or may not want to look at it or use it. You can enter in management fee, and that's driven off of revenue. There's 4 different ways. You can do it off gross revenue. You can do it off net. You can do it with or without income, other income. And then, of course, one-time expenses. Again, same kind of concept where maybe you have one big expense in year 3, and you just wanted to hit year 3 for a particular reason. So, with that said, we have entered our income, our vacancy rate and the growth rate. We've entered our expenses. We've entered our cost. And now let's go to our debt, which is pretty much pre-populated because there's a formula, and that's driven automatically off of this number, the total cost, or the contract price. Okay, there's a difference that you can choose. One being if the lender only is going to give you 80% of the contract price, but you have a lot of other improvements, or they may say, hey, listen, all in, I'll give you 80%, which is going to be your total cost. That's controlled with this number. You're telling the software to use the total cost or the percent of the contract price. And of course, you can use a drop-down menu, and again, something is in yellow, so you can actually you can type over the formula if you want to do 31.2% for some reason. Again, this is the formula, automatically populated, but you can type over it if you want to, and then your interest rate and your term, and those are the only components that you need to come up with your mortgage payment. And of course, you have different ways of calculating interest, whether you're Canadian, interest only, semi-annual, and so forth. Mortgage 2 and 3, you could have, maybe you're assuming a note and getting a new note. So you can have 2 notes starting out. I'm not going to go through some of these things just because of the short time that we have. Origination points, you enter the point there and it calculates the dollar amount. You can finance it or not finance it. And most importantly, it's going to be automatically calculated is our investment in this property. In other words, we've got the total cost, we have the debt borrowed plus our loan origination fees, the cost less the amount borrowed plus our origination fees is our down payment. That, in theory, is when you go to closing, that's the check you have to stroke. And it's extremely important as an investor, you now need to understand, okay, if I'm going to write a check for $700,000, what is it that I'm going to be getting for that? And that's a question that really people kind of struggle with understanding that. And if you can harness the understanding of the cash flow and what you're going to be getting, as Charlie mentioned in the beginning, it's a business. Understanding the numbers, what do you get? Will you get over the number of years, the term of the investment as it relates to your investment? And that is where we go to the cash flow analysis statement, which is on this tab, or you can access it through this button called the CFA. There's up to 20 years. These are protected sheets, but you can unprotect them if you want to. But for your safety, they've just been protected because they've got different formulas in it. But with that said, there's not password protected, so if you need to change a description or if you want to make a change or change some things, you can do that. You certainly feel free to do that. If you on Excel, you would just go on the review tab and then unprotect, and then that unprotects the sheet, so you're allowed to make some changes to it. But with that said, we've entered the income, the expenses, the cost, and everything's kind of pre-populated. You see that we have the rental income that is modeled out for the first. We're just going to look at 5 years. Here's our other income growing per year. Here's our vacancy rate at 5%. Here's our funded reserves, okay, that we entered at $5,000. Here's our expenses.
And let me just interrupt you here. We had a question that where does the initial improvement show up on the numbers in the CFA? And that's right where they show up, right? They're under the funded reserves.
Well, the initial improvements are part of the cost.
Oh, I'm sorry, that's right, the $25,000.
Yeah, that's part of the cost. So whether you pay the seller to make the improvements or you go out and do it, mechanically you want it part of the cost of the property. If you're talking about improvements in year 3 or year 4, that's where you're going to use this schedule, and then you will see this row changed, and that's where it will pop out. But from a presentation standpoint, initial improvements, even if they're like 2 or 3 months into it, I would definitely show them as part of the cost of the property so that your ratios and so forth are not skewed with a very large negative cash flow. I could show the $25,000 coming out in year 1, but that would just it would skew the presentation of it, and even though the internal rate of return is still going to be the same, but you want to just make that part of that cost. So as I mentioned, the funded reserves are above net operating income. So if you add all these numbers up, here's our net operating income. You have the option of moving this down to below net operating income, and I'll show that in a minute as to why. But you might want to do that. But here is your debt payments, the debt service that's automatically calculated. So now you can show what is your cash flow before taxes. And it's not very much, but basically for your $700,000 investment, you have about $10,600 in cash flow before taxes. 14 in year 2, and then 17 in year 3, and so forth. So these modeled out, and it's going to tell you what your cash flow is. Down the next section is the important part, which is our resale analysis. And this is where we do that mark to market, where we say, okay, if I buy this today, what will I sell it out down the road? And you tell the software your formula, your method, and we're using a cap rate of 8%. And if you do the math of 151,110 divided by 8%, you're going to get a resale price of 1.8. And it's the way it's calculated every single year. So the higher my income, my net operating income goes, the higher my projected resale analysis will be.
So what we're seeing here, Doug, is that 2.2 is not the right price.
You are very astute.
Yeah.
and you stole my thunder.
I'm sorry.
No, absolutely.
I'll go back on mute.
It doesn't, you know, the thing about it doesn't take a whole lot to figure out quickly that 2.2 is not the right answer if we are only generating this amount of cash flow, this net operating income. But the beauty of the software is that it points it out pretty quickly. And the more familiar you are with the software, the more you'll be able to quickly say, hey, you know what, this doesn't make any sense, and here's why. And this is sometimes you go back to sellers and you beat them over the head. Say, tell me why I should pay 2.2. Help me understand.
Exactly.
And so it's a very useful tool in going back to them and doing that. So in our case, I want to kind of give you an example here of it's worth 1.88 because we have the funded reserves at the top. But if you change the presentation to after NOI, you'll see it move down, and then that fundamentally changes the value because our net operating income was shifted by where we're presenting this line. Now, if you're a seller, that's exactly where you want that to be. If you're a buyer, you want it to be above the line. And I would always recommend you having it above the line because I want this number to be conservative. If you're going to make a mistake, I want you to be able to anticipate it, and then if it doesn't turn out to be that way, then it's all cream. So the way the property resale analysis works in our particular example is it's driven off of the net operating income, less our selling expenses, less the debt that's being paid off, gives us our projected cash flow in that particular year. So if I were to sell this in year 5, I would go to closing in year 5, and they would stroke me a check for $600 and almost $12,000. I would have generated these amounts of cash flow per year, plus I'd have a cash flow from the sale of $611. So what does that mean? Remember, I invested $700,000. So what does this all mean? And if you look at the cash position, I put this. There's first of all there's a dollar presentation of it, and then there's a percentage presentation of it. So looking at the dollar presentation of it, you can see the cash flow for year 5 plus the previous year. So if you add these two numbers up, it's going to equal all these numbers. Here's the 611, and then my initial investment of $700,000 is subtracted. So I have lost $2,338. So for 5 years, I've had my money tied up in this property for the pleasure of owning this property. I have lost $2,300. So this is where my credentials come in, and I'm able to tell you that this is not a good deal.
Exactly. You went to school for this.
I went to school for this, and and actually put it in red, so in case there was any confusions, that would definitely alert you. I won't go through all the different ratios, but on the cash flow analysis report, you will see the various rates of returns and the cash on cash, and you'll see that it's got cash on cash return a positive, but because we've overpaid for the property, our total return is next to nothing. And this is obviously, very quickly you can tell that this is an overpaid, that's overpaid. So since we've discovered that we're paying too much, well then based on this scenario, what should we pay for? And this is where we go to our neat feature called the goal seeking. And if you go to a button on the goal seek, this is where we solve backwards. And we have different options that you can select, and in this case we want to solve backwards for an offer price, and then we pick our metrics. And in this case we want to just do internal rate of return. We're going to choose 5. Year by year 5. So we want a goal. I'm going to say 15, 20%, whatever your goal is. I'm going to say I want to make 20. I don't want to buy this unless I make at least 20% annually on my particular property. So if I'm going to want 20% by year 5, I'm telling it by what date, compared to what 2.2, and here's my rate of return that's being calculated now. What should I pay for this property? And if you click a button, it automatically tells you that you can't pay any more than $1.65 million very quickly. And I'm going to prove it by going to the input data screen and changing this number to 1650444. And if you go back to the analysis, year 5, 20%. Boom.
Perfect.
All the red's gone. All the red's gone. And of course you can pick and choose if you want to buy year 3, year 4, and so forth. And then of course you'll see all the different, the cash flow is a lot healthier. And you know, a $1.6 million number is certainly makes a lot more sense because our revision, because our projected sales price is certainly a little higher than that 1.6 million.
You know, and this is a perfect example of my saying that you can fix anything on a multifamily property except overpaying for it.
Exactly. And then when you do overpay, all you've done is locked in your loss. You're just amortizing it over the life of the investment. That's why it's extremely important to hit these numbers and just and go over. You know, you can do the different analysis. Well, what happens if we do this, or what happens if we have expenses of that, and change the numbers and get. You know, you have a working model, and you want to be conservative. You don't want to be too conservative, so you box yourself out of the investment. But you definitely have the ability to come up with the numbers. But let's assume for a moment that you just got off the phone with the broker and he said, yep, we'll take $1.65 million. Okay, you're right, we were greedy and we'll sell it at 1.6. And now you want to go to the marketplace. You want to go to your partners. And so with this software, you're able to create a presentation. We're pretty much already done with the numbers. And if you go into the different reports, like an executive summary, you can insert pictures, the photo album, you can insert photos. I've obviously pre-populated this. You have all the different buttons here that will come up with that help you do that. And I want to go quickly through a sample report that is printed from this software. And let me go to the cover real quick, which you may or may not use in your presentation. But you'll see where you can insert these pictures. Obviously, these buttons will not print. These are just input. You can change newly renovated. You can change however you want to do it. Here's where the logo was inserted by using the insert company logo and all the particulars. And when you print it, it looks just like this. And even though you're using Excel, it doesn't look like it's from Excel, and that's very important because this package is what's going to blow the banker's socks off. It's going to blow the partner's socks off. I have example after example of somebody going into a bank and getting a loan, and they drop the interest rate when they present them using the software, because the credibility factor just shot up. Now they're not dealing with somebody on the back of an envelope. They're dealing with somebody that's up. They've got their ducks in a row. And it's as simple as that, because loaning money is about risk. And if you can do things to reduce that perceived risk, then it's going to be to your benefit. So here's the cover. Again, you don't necessarily have to print out everything, but you know, you've got the executive summary. You can put notes on it. You can change the year if you want to do 2 and 5 or 3 and 5 instead of year 7. You can change all of these different assumptions. If you want to write about the property, you don't have to, again, but this is something when you really want to get into a robust situation. If you have photos, you got to have photos if you ever want to get somebody involved, because nobody's going to invest in the dark. You can use a map. You go to Google Maps, type in the address, do a screenshot, boom, save it as a JPEG, insert it as a picture, you're done. That's simple. Here's your cash flow analysis report that we just went through in detail, where we're showing their rates of return and the different measurements. Here's the rent roll, and where we have the unit descriptions, the number of units, the square footage, and you have a nice little unit mix that's automatically done for you. Other income broken out. Here's the annual expenses. If you remember, there was like 36 different inputs, but it's only going to show you what you inputted, instead of having 6 rows of zeros. It's only going to show you what you've inputted to keep it clean and crisp and professional looking. If you just show them a bunch of zeros, then you just showed them an Excel spreadsheet, which is fine, except you don't necessarily need it. You just want to show them what's important. APOD. If you want to use the APOD, you know, on our website there are certainly a lot of articles that we have discussing the different calculations, the different what internal rate of return is, what's cash on cash return, what's return on equity. You got property equity analysis, and this tells you what your percent of your equity growing up with debt pay down, alternative investment comparison, a hold sell analysis. Is a whole different concept there, because you want to basically determine what that return on equity is every single year, break even occupancy, notes and discussion, and you got comps, you got IRA reports, you've got a lot of different things that you can print. But again, just keeping it simple. You want to have an about us, about you. You can change this so that people understand why they should invest with you, terms and definitions, and you know, what have you. So, the very quick way to do the analysis. And
you know, this is exactly what I was talking about. It takes you right from the very beginning to determine whether it's a deal or not, making it a deal, and then bringing it all the way right to the package of, you know, presenting it to the bank, but also presenting it to your investors and raising the funds for it. And it's all done for you, nice and neatly. It's such a fantastic software program, Doug. You did a great job with this. This is really good stuff. I've got some great questions here. So let me and then there's one other thing I want you to touch upon in the software that I use all the time with my students, and it's something that I want you to talk about in a moment. But let me run through a couple of these questions. This is a great one. Where can we enter penalties paid for payoff of the early debt? You know, if there are any, yeah, you're going to jump right over there and show us exactly where it is.
There is we have it. It's actually hidden, but we can unhide it for you. That's one of those things that we change with markets, where there's a lot of payoff early kind of penalties, but in the market that traditionally is not been, so we hid that. But you can also you can use the future selling expense as a percentage if you wanted to do that. But if they want to contact me through you send me an email, I can help them through that to unhide that penalty box.
That's great. All right, another question is what cap rate, and this is something you kind of glossed over this, and I can understand why this question has come up, but yeah, what cap rate is the projected sales price based on, and how do you adjust for it for the type of property being analyzed?
Well, cap rate is going to be something you need to understand in your area. And it is a function of the type of property, whether it's a land lease or a warehouse, commercial property, or apartment complex. And so you'll need to kind of understand what that cap rate is in that area, and that's what you're going to try to use to analyze what you would be selling this for. So you almost have to put yourself in, if I own this and I sold it today, what would that cap rate be? And that could be, if you're in California, it's going to be somewhere in 6% maybe, and if it's in Alabama, it's going to be maybe 9%. It depends on so many different factors in coming up with that.
Now, another question is, can you explain the net present value, the NPV, on the cash flow analysis page? And you've got 8% cap rate, but the NPV is showing at 13.5%. So how do those numbers combine?
Well, the net present value and the cap rate are completely not related.
Mm-hmm.
The net present value, and by the way, there's some other things where you can hide financial measurements, and hiding net present value would be something that I would do because a lot of people don't understand net present value, and they really don't want to take 15 minutes to explain it to somebody during a conference. But with that said, net present value and the internal rate of return are brother and sister, okay? The internal rate of return takes a set of cash flows and determines a percentage, a rate of return. The net present value takes a percentage and then comes up with and takes the cash flows to come up with a particular value. So one's solving for a percentage and the other one's solving for a dollar amount. And if you to prove it, if you use, this is rounded, if you use the internal rate of return of 22.17 and then use net present value, then the net present value should be 0. And it would be if I extended this to several more decimal points, got this exactly like this. But this is where the brother and sister of this is, and I would say, again, most of the time you're not going to show that because the financial concepts and trying to explain it can be very convoluted, and you really want to focus more on these rates of return. This is going to be more for your heavy-duty user. We have to have this in the software because we do have a lot of CCIMs and so forth that value that computation. But for the average user, I would hide it.
Excellent. Now let me ask you, can you utilize a dollar per month versus a percentage per month increase for rental increases per year?
No, you would need to convert it to a percentage.
Okay. All right. Excellent. All right. Now
if you did it on a square footage basis, you could do a cents increase. So in other words, 50 cents increase rather than a percentage. But when it comes to apartments, if you're doing, okay, I'm going to raise this $5 or a year, you'll just need to convert that to a percentage.
Right. Now, final question here before we jump over to the section I want you to show is, how do you account for increased property taxes resulting from a post-sale reassessed value? Where would you have that in there?
You would have that, what I would do is I would analyze the property with that adjustment. So the point being that if I buy a property that's on the books at the county for $100,000 and the property taxes are $7,500, and I come in and pay $1 million for it, the county is going to come knock and say, oh, well, that's now your taxes are now $14,000. I would go ahead and just analyze it with that increase.
Right. Right, and we see that a lot in Texas with the, that it's a non-disclosure state.
Yep.
So.
Right. Now, also as far as, like if you're in California, sometimes your property taxes will have a smaller decrease or a limited decrease compared to your other expenses. You can control each of these increases separately, kind of like this global increase. If if you wanted to do it separately then from the others.
Excellent. Now, the section that I think is fantastic is your partnership section. And when you're looking to raise private money and understand, how much of the deal do you need to give away in order to make it still exciting to an investor, this section answers those questions for you. Just kind of walk through that.
Yeah, well, when you have a deal, in our case we have this deal, and let's say that I want to invite you, Charlie, to invest with me, but I want you to put up all the money, but I'm going to give you 65% of it. Your rate of return is going to be quite different than mine. Of course, if I have no investment, then I have no rate of return because you can't divide something by zero.
Right.
But you would simply input the numbers here of what you're giving the limited partner, and then the managing partner being you, and then of course your if you're going to give them a preferred return, that is preferred return on this cash flow or on the sale, and then how much cash you're wanting to have this limited partner give you for this investment. It will do all the different calculations for that specific partner. And you sometimes don't know what percentage you want to give up. You don't know if you want to do a preferred return. Sometimes you have to kind of monkey with the numbers to say, how do I make this attractive for that investor? And you have to play with the numbers a little bit. Sometimes on this deal you might want to do a preferred return. On the next one, no, you know what, I don't need to because it's really cash flowing well. And so that's how you would do that. There's different methods that you can do the preferred return. There's manager reports that you can show your return. There's a lot of different things where you got a syndication fee. It's very robust. If you refinance and then you send back those refinance proceeds to the investors, there's a way of allocating those out where maybe it's first in, where you're paying them out their investment, and then their investment is modified by that. So you want those calculations adjusted. You can do before and after tax. You can do an IRA. There's a lot of different ways of saying, okay, here's the deal. Now, how do I divvy up the cash in order to get that investor to open up his checkbook?
Exactly. Yeah, and that's what this section does, and it also ties into the marketing package as well. So when you go hit the print button, all of this comes out, and it's a nice little package for your investors.
That's right. You got a partner module. You can do a partner cover. You can talk about the sources and uses. You can talk about the investment, what you're looking for. You can, create a confidential offering that could be, just preliminary before you go to an SEC attorney, or however you want to do it. You use it for, you may just want to use it just for the calculations to show them, hey, if you give me XYZ dollars, I'll give you this piece of the pie, and you'll make that, and I'll make this, and we'll all go, merrily down the road.
Exactly. Yeah, this is great stuff, Doug. This is when this property pack, when this software was showed to me down in Florida. I mean, actually, it was in Washington. I just knew right away there's nothing out there that can do these things. This thing is absolutely fantastic.
Mm-hmm. Well, I appreciate that. We have been worked very hard to keep this flexible but intuitive and affordable. Again, as you mentioned before, we're always still looking for feedback. We have heavy users that say, can you do this, or can you do that? And we love that because, yeah, we can do that. We'll fold that into the next update.
Excellent. Well, I appreciate your time. There are many more questions on here that I'm going to work offline with you to get answered for all the investors, make sure that everybody gets their questions answered. But I really appreciate the time and you coming online tonight with us for this webinar. And I'm going to show everybody in just a moment how you can get it. I'm actually going to make it available to my coaching students and anyone else on the line tonight for free. You can get the software, the Cashflow Analyzer Pro software for free. But I just wanted to thank you again, Doug, for your time.
Thank you so much. Yeah, absolutely. My pleasure. My pleasure.
Yeah, this was fun. So I'm going to take the ball back and thank everybody. Thank you, Doug, for your time. And let me just kind of jump back here and show you exactly what how we operate here. As I mentioned before, and this is something that I use all the time. Landlord Cashflow Analyzer is the best tool in my toolbox for any new investor, actually, for starting your multifamily real estate business. I use it every day. I use it with my students every day. I can't do this biz without it. As Doug even trademarked this particular saying, he says, know if you should buy, sell, or just keep looking. And that's exactly, when you start to become very proficient in the use of the software, that's exactly what you'll know right away. And you'll be able to determine whether you get a deal or not, or how to make it a deal. Now, and when you talked about making it affordable, it really is very affordable. It's $99.95. And I'm going to show you exactly how I'm going to make it available to you absolutely free by giving you a little bit more of an idea as to how I operate. And my question to you is, how successful would you be if you had the best multifamily coach, consultant, mentor working for you? Somebody that can help you find the deals, or even more importantly, understanding what a deal is, how to make the offers, how to craft the offers, how to write it up and make sure that the offer gets accepted, how to get deals under contract, how to find the private money and do it the right way, and more importantly, providing you with the confidence. That is the #1 thing that I see lacking in new students, new people in this business. They lack confidence. And that's what I am here to help you with, is to make sure that you have the confidence that you need to do all those things I just described. So how successful would you be if you had an expert, someone that has done this and worked on over billions of dollars worth of multifamily deals that helped you through the entire process? Now, that was the issue that I was seeing out there. Let me just give you a little bit of background. As an attorney, and focusing strictly on the multifamily side of it, I was surprised when I first got into this of how many investors who had gone to some guru's camp and gotten themselves into trouble, and now they were coming to me to help them get out of the deal and protect them, get their earnest money back, or get help them with their investors, calming down irate investors. And I looked and I was trying to understand, why is this happening? And it was because they were not being taught correctly. Nobody was looking over their shoulder to help them get the deal done correctly. And that's when I started with the Multifamily Investing Academy, I've created this Masterclass Elite program. This is my online coaching program. This is how you can get access to me, how I can help you through these deals, how you can get that confidence that you need every step of the way. I'm telling you, folks, you cannot learn this business in a weekend. You cannot learn it in a 3-day boot camp. And you can't learn this business from a home study course out of someone's boss. You've got to do a little bit every single day, just a little bit every week. That's how I got started when I was first buying apartment buildings. Every Saturday, I'd look at all the information that came in over the course of the week, and I'd evaluate deals. But I'd do it every single week, and that's how you have to do it to achieve your multifamily goals. And that's exactly why I designed the Masterclass program the way I did. So let me kind of give you an overview as to exactly how my program works. First off, and this is something that's key, and people are surprised by this, you actually get direct access to me. And there are 3 ways, over the course of a month, you get direct access to me 3 times. I do 2 group coaching calls, and I also do a live multifamily offer writing workshop. And I record all of these calls, and they're all up on the membership archive site. So if you can't make the calls, you can always go back and listen. And typically the group coaching calls start off with a lesson. I teach a particular aspect of the multifamily business, and then afterwards I take calls and I speak directly to my students and to my mentorees. So if you need to contact me, if you need to speak to me, if you're working on a deal and you want to figure out exactly how to do it, this is how you can have direct access to me. Just kind of give you an overview. This is actually a screenshot just of the back computer back here. There we go. All right. And it takes you right back through to the letter of intent. So you can see what it takes to look at a broker's package, analyze it in the software, and then draft a letter of intent that will get accepted. And that's the whole point of the Masterclass, the offer writing workshop. Now, one of the things I always love hearing back from my students. It happens to be someone from Oregon. He said, I'd like you to know that I've been completely satisfied with all the content. Charles Dobbins, you are a great teacher, and you come across as someone who really cares about helping others. And that really hits me hard, because I've seen so many people get hurt in this business by the gurus out there that are trying to teach it the wrong way. And I like it when people see that I'm not like all the rest. I'm actually, enjoy working with my students. I look at my mentors' direct emails every single morning. That's the first thing I do. It's a lot of fun. Another thing that you get, and this is very important to me, if you go on my website and read a little bit about me, you can understand my issues with the SEC. They are not anyone's friend. They're not there to protect anyone but themselves, in my personal opinion. But what I've done is I put together a 6-month tutorial on private money. And I show you how to go after private money the right way, and from a multifamily investor's perspective. I've raised over $5 million of private money in order to do my deals. And I'll show you exactly how I did it, the types of property packages that I used to raise the money. As you can see here are a couple of the private money. This is from the membership site. I have handouts down here that you can download. When you become a member, you download all the handouts. I show you some offering memorandums for large multifamily properties. There was over 200 units for medium-sized properties, and 40-unit-sized properties, also for small properties, for like 8 to 10 unit properties. So depending upon what your market is, I provide you with all the information that you need. You can download it, and you can just fill in your own information so that you can get out there and raise the private money the right way, so that you're protected. This is not, and here's my caveat as an attorney, this is not a replacement for the use of a securities attorney. You will always need one of those, but this is going to help you put together the package that you need in order to present to your investors. Now, another thing, and this is key, every month for the first year, you are going to receive a new tutorial on how to get started in the multifamily business. And this is stuff that I teach, for example, let me show you the first lesson. Is about 1 hour and 30 minutes, I believe, and all it is how to find deals on the internet. And I show you places to find deals on the internet that nobody else is showing. And I actually put it together a handout so that you can print it off and you can have it with you as you go through the internet and find deals in places that nobody else looks. Second lesson, I teach you how to find brokers. Once you find the brokers, you need to know how to speak to the brokers. I teach a whole lesson on that. And so every single month you're going to get a new lesson from me for the first year so that you have the confidence that you need in order to make the deal happen. This is another one of my students from Washington. She says, what makes your coaching service better than others is that you take an interest in your students. You seem to actually care. This means more than you know. And I got to tell you, not only does it mean more than you know to this particular student, it means a lot to me too, because this is exactly why I started my coaching program. In addition, I have got 2 other video series that you get every single month. One is the Ask the Expert video series, and the other one is the Look Over My Shoulder video series. And essentially what it is the Ask the Expert is like playing Stump the Professor. You have a question, you send it in his email. If it's a good question, I'm going to put it on video. I'm going to answer the question and then post it to the website. And so every month you'll get an updated Ask the Expert. All of these are archived. They're all on the master membership site. You can find them directly. And also Look Over My Shoulder is like watching a day in the life of a multifamily investor. I will show you different things that are going on in my business so you can understand what it's like to own and operate multifamily property. As you can see here, more screenshots, videos. I do everything in videos. I try to keep it very visual. I want you to put forth. And here we go again. Okay, good. Not that long. Okay, this is actually a very recent update. I thought I'd write you and let you know that I've been enjoying all the valuable content that you've put together. You've done an excellent job directing the students to resources that most don't know about. And I think this particular student happened to be looking at the first video for finding deals on the internet. Because really, folks, there are so many places on the internet to find deals that nobody else even talks about. And that's what I go through in my lesson. Now, here, what else you're going to get is, and this is key. As a lawyer, I have produced numerous documents, numerous templates, numerous contracts, in addition to webinars and training manuals and training videos, and I've put them all together in one site, and that is my resource and archive section. You get access to this automatically. It has training sessions. I've got a whole section on master lease options. I've got a whole section on letters of intent. Depending upon what type of deal you're doing, I've got the template letter of intent for you. I've got you, Doug's Cashflow Analyzer. I actually have a 9-part video tutorial on how to use the Cashflow Analyzer. Every document that I produce, and even the ones, if you come on here, I had one student come online and said, hey, I need this particular document. Do you have one? And it took me no time at all to produce it for him. I posted it up on the internet here on the resource and archive section and made it available to all of my students. And that's what my resource and archive section is. It's like having a tie into my law library, so to speak. Another student said, this is a very funny testimonial. I love putting this one up here. This is actually true. I don't advocate for this, but I got this one from the owner of a RIA club. He said, I just spoke to a member of our RIA just 2 days ago that said that he didn't need to be a part of our organization anymore because Charles Dobbins' podcasts were all he needed. Not kidding. And I quickly called up the owner of this RIA and said, hey, I apologize for that. I will talk to my student and tell him that he really should remain in your RIA club. And he did. Now, actually, I get the opportunity to meet this gentleman pretty soon. And here's what you get when you sign up tonight. I'm going to give you Doug Rutherford's Landlord Cashflow Analyzer software absolutely free for everyone that signs up for the software tonight. So what is the membership fee for my masterclass? It's in the first month, it's only $77. Every subsequent month, it's $197 per month. Now, but you can try it out today for just $77. And here's how it works. I do not believe in long-term contracts. I do not believe in large upfront deposits, like you have to pay 50% of a $10,000 coaching contract. That's baloney. I don't buy that. You can quit anytime you want if it's not the right program for you. We just shake hands and we walk away friends. No questions asked. And here's what I'd like you to do. Try it today for 30 days. For the full 30 days, I want you to be involved with at least 2 live group coaching calls and 1 multifamily offer workshop. If you're not completely satisfied, I will refund you your $77 membership fee, and you get to keep Doug's software as absolutely free as my gift to you. That's all I ask. Stay in the program for 30 days. If it's not what you want, I will be more than happy to refund you your money, and you get to keep Doug's software. And that's how confident I am that the Masterclass program, in my opinion, and I've been involved in a lot of these coaching programs, not only I happened to work for one years ago, but also I've had to represent a couple of clients trying to get out of other people's coaching programs. So I am very confident that my program is the best thing out there in the market today, best bang for the buck. It's going to be the best way for you to take it step by step in finding that first deal and getting it under contract. So I am going to, if you look over here on the box to the in the chat box, I have just posted up there the link to the offer. So if you just click on that link tonight, you will get the free software from Doug, and for $77 you get 30 days, test it out, find out if you like it. I'd love to have you on board. I'd love to get to know you. If you're looking to get into this multifamily business, I think you'll find that the Masterclass Elite program is the best way to go. So, folks, thank you so much for your time. Let us know how we can help you. We are here for you every step of the way. That's our objective, is to make sure that we can help you do this business correctly. So, have a great night, everyone. I'd like to thank you for attending the webinars. And if anybody has any questions, you can just shoot me an email right here at this address. And I'd love to have you on board. I'd love to have you as a member of my Masterclass program. I'd love to get to know you all. So thanks, everybody. Have a great evening. Thanks for stopping in. It's been a pleasure.